I'm going to be moderating this session now for the next 45 minutes to an hour. We have got a very, very eminent panel, as you can see behind. This is an ICS International Chartered Shipbrokers session. My name is Zarir Irani, and I happen to be the business lead for the ICS. And as a result, we've put together some very intelligent people today to talk about how we can make money out of the lovely regulations which everyone's talking about the carbon regulations, about the compliance, about sustainability. So all these lovely things, but the twist is not how to comply, but how to make money out of these regulations, or at least try to make money out of them. So if you all want to be listening about how to profit from these regulations which everyone's weary about, this is the session to listen to. So if you're standing outside this little barricade and wondering what you are doing, you all need to be sitting here and listening to how ICS, the Chartered Shipbrokers, is putting together a session to make you all aware of how we can make money. So join me in welcoming our eminent panel. We've got a local boy who has been here for 46 years. May I welcome Nijo Joseph on the stage to sit right here beside me. Nijo has been here since he was in his first grade and has spent 46 years. He's been a serial partner at law firms, understands local regulations better than most others do or claim to. So Nijo is going to give us a perspective about how UAE plays a part, or how the local companies can come in with the international minds that we have. So our next panelist, may I welcome Orestes, please, to the stage. Orestes has been on the panel with IMO. He's a IMO mascot. So if you want to catch hold of somebody who's been responsible for these regulations, it probably might be him. He is a ship finance professor, originally started off as a naval architect, his background, but he will tell us the thought process behind why all these regulations come in. And he plays a very important role in making us understand the nitty-gritties of these regulations, the fine prints, so to say. We also have somebody who understands carbon trading well. So Nick, can you please come up and join us? Yours is the second last seat there. So Nick is somebody who understands carbon trading. He's a carbon trading specialist. So he's going to give us a little insight about how you can get your carbon credits and make some money out of that while complying with regulations. And then we have got somebody who's a very, very smart, legal, international mind. We've got Olaf. Olaf, can you please come up? Olaf is a lawyer in ship finance. He's got 30 years of international ship finance experience with a number of major banks. So he brings in the ship finance perspective to it. So we got people who understand this subject better than most others do. But the underlying takeaway from this session is going to be how can we make money. So do not get scared of these regulations. There will be enough people telling you how to comply, how to be in line with and we're not talking about making money by saving fines. We're talking about making money in real terms, in carbon trading. So I will not take any more time. I have an opening question to all of them, and this was not the introduction to them. This was only me opening up to make you all understand what we have as ICS to offer you as this session. We've got two of the panelists who've got a small presentation to get you all wound up. But I've got an opening question before they go up to all of them. Before they answer the question, I would like them to self-introduce themselves, give us a little bit background so that the audience believes in what you say. Everyone's talking about the geopolitical imbalance or a geopolitical buzz that is happening. Everyone's talking about the new carbon washing that is happening. Our American friends have started looking at the blue economy as being a very, very interesting place to make money out of. So my opening question is common to all of y'all. What do y'all, from your own perspective, make out of this geopolitical turmoil that we are seeing in the world? We want you all to self-introduce first. So we start with Nijo. Go on, please.
Thank you, Captain, and I hope I'm audible to everyone. So my name is Nijo Joseph. I'm presently Executive Director of Monjay's Partners. We're a niche transportation consultancy. Anything that flies or floats, when it comes to the financing of it, the transactional aspects of it, we are here at hand to actually give you a help on it. Yes, Captain, thank you for giving away my age as well. I've been on a diet, but 46 years, yes, this is what it is. And I was going for 36, but okay, fine, thank you. Being a lawyer, to answer the question on geopolitics, I think, and the turmoil and carbon washing and so on and so forth, I think the one thing that we understand from a UAE basis, because that's where we're all based out of, that we see both sides of the story. We see what's coming out from the west, we see what's coming out from the east, and we are in a prime position to actually make informed decisions, because we see when something arises, because the sun rises in the east and the sun sets in the west, and we've actually seen the full spectrum of these sort of activities playing out. Now, when it comes to carbon itself, or decarbonization, or climate change, and so on and so forth, these are words that are simply thrown about without much scientific backing, without much empirical value, without most studies going behind it. People, Captain's Ponzi pitch right at the start, like, let's make money out of carbon. I thought I was in like a pyramid scheme for one of those, you add on to your followers and then you will make money as you go down. No, so people tend to use these sort of taglines, decarbonization, climate change, etc., from the point of view of either sensationalizing something, which is nothing, and or selling you the wrong thing. So one thing that the United Arab Emirates has really done is it's valued its partners, it's evaluated the options that's available to companies locally and regionally, and it has not decided to just step onto something for the sake of it. It has taken valued decisions. So you've got behemoths like ADNOC, regional behemoths like Aramco and Qatar Energy and so on and so forth. They have taken measured, they haven't gone all out. And by being all out, there was the net zero banking alliance where all the banks jumped in together in once, and as soon as there's a change of presidency in the United States, everybody started dropping out as well. So this shows, at least from my point of view, a lack of tempered and measured steps moving ahead. But at least I think from our perspective, Captain, we have taken enough measures to understand what adds value, what adds to the cause, because decarbonization, climate change, it's a moral question as opposed to an economic question. Like I was dropping my daughter off at school a couple of days ago, and there was this little, my daughter's 9 years old, by the way. So there was another little child carrying an umbrella, and you could see her fainting. Okay? And this is the month of May. I grew up here. I'm not used to 47 degrees in the month of May. I'm not used to it. You can take it for granted. This is not normal. But what does it mean? It means climate has changed. But at that point in time, what do you do? Do you, this is the question for the rest of the panel as well. Would you say that, let me do something that is really good and help in negating the bad effects of climate change? Or do I simply make money out of misnaming an industry process and then try and get something out of it? These are moral and economic questions which I hope we will answer today with this esteemed panel and with your guidance, Captain. Thank you so much.
Thank you, Nijo. Very well said. You have, if I summarize, you saying cautious steps. UAE has been very calculative about the way we've gone about, and that's the tempo of the local marketplace. Fantastic. Well said. Orestes, what are your views on geopolitical turmoil from where you see it as HHX? Please introduce yourself.
Yeah. Is it okay?
Stick it in.
I mean, can you hear me?
Chin.
Yeah. Can you hear me? Yeah, great. So, thank you thank you very much for the invitation. My name is Orestes Skinas, and originally I come from Greece. So, as being a typical Greek, there is nothing else to do in this country but to devote yourself professionally, physically, mentally to shipping. So, Captain, in my view, all this turmoil is just music in my ears. It is music because we are talking about a new set of challenges, a new set of opportunities. I'm not taking side. I don't care if it is Donald Trump or President Xi or whoever who is in charge. What I see is that the global economy is moving towards a completely new equilibrium. The old world is dying out, is phasing out. So the new world is the one that emerges, and emerges with, in my view, a new currency that is called carbon. And this is the idea, because, you know, all these big changes, I mean, go back to the history of mankind, they start with, let's say, very painful pregnancies. Until the moment the baby comes out, we have only pain and expectations, we have uncertainty. But I think that we are very close to the end of the pregnancy, and I think that there is, let's say, light at the end of the tunnel. But going back, geopolitics were always messy. You are sitting in the middle of the world. I mean, you know everything about oil reserves, the importance of the oil supply, of energy supply. You know all of this much, much better than we do. So you realize that your wealth is going to be available in the future if only we can translate that with the let's say, currency of the future. And this is going to be the carbon. Thank you.
Thank you very much. Talking about pregnancy, do you know it's a boy or a girl? Or in between?
Okay.
Sorry.
European legislation or outside of Europe?
Whatever you identify.
Whatever it is, as long as it's a boy or a girl, it's fine. I mean, in Europe, you can call it it. Yeah.
Right, but very interesting. You've been instrumental in making, playing a part at IMO, and you have mentioned about the C word being an absolute dominant force, and that's what we're going to carry forward, and we're going to ask Nick to elaborate more, who understands a little bit about carbon trading. He is somebody who has been putting his time, money, and effort into it. So, Nick, can you please introduce yourself and tell us a little bit about what Carbon X does and how you would see this as an opportunity, a geopolitical opportunity to potentially make money?
Thank you. Thank you so much. Hello, everyone. My name is Nick Gouvalas. I'm also Greek. So I think it's essential that you end up in shipping as well. I represent Carbon X, which is a Canadian boutique trading house specializing in carbon. And I actually, to elaborate a bit more on what my fellow speakers said before, what is very important here, it's the level of understanding that people have, and especially the maritime sector, for carbon trading and carbon solutions. I think in this particular sector, it's something that will give you the opportunity and the perspective that you need in order to tackle the challenges of sustainability and biofuels and things like that in a way more practical and realistic matter, right? So the first aspect is what is carbon trading, which is basically derivatives of carbon. There are credits that come from actual projects that do remove carbon from the atmosphere. That's one thing. And then you have the more compliant markets, which is more of a cap and trade system as Europe does. And then the IMO will soon follow on a global carbon pricing mechanism. So the point here is that the opportunities that exist for the maritime sector in this field are enormous. They're great, and we can elaborate furthermore on the presentation. And yeah, that's with regards to the geopolitics side, which is very important. What I have to share with the audience, which is kind of a paradox of the current situation, some of the most successful years when it comes to revenue from carbon trading was actually during the first presidency of Donald Trump. And this is very important to keep in mind, because Trump, yeah, he was, as I agree with Orestes, I don't really mind if it's Trump, Xi, or whoever. But what is important to keep here, it's he has been against sustainability regulations, Paris Agreement and all that, but he hasn't expressed anything negative about the carbon market mechanism. So that's something very important to keep in mind.
That's good to know. That's good to know that you have a positive outlook towards it. He might be tweeting as we speak probably about it, who knows. But we'll keep that when we get to know it. Let me go to our last panelist for the opening comment. We heard so much about greenwashing, where the new marine money is going to come from. You've been in ship finance for over 30 years. Do you think geopolitical turmoil is going to shape the source of funding or the way funding takes place? What are your views from your lens that you see as a lawyer and a ship finance professional? Please, can you elaborate, Olaf?
Thank you very much for this for the question to me. Thank you very much for being here, for having me here. And yeah, my name is Olaf Dankwerts. I'm a German guy here on the panel and very much focused on the ship financing sector since many years already. I had the pleasure to be at the forefront of the restructuring side in the years 2008 and the following. But now, since about 2016-17, together with Orestes, we are working with the HHX Blue in the fields of digitization, of standardized procedures that are related to financing and also to greening aspects. And this is where we are continuously contributing, and this is also where we already have seen some ups and downs in the markets when it comes to carbon pricing, to discussions about how it could work in shipping with carbon, about the, let's call it step-by-step implementation of the first rules, sorry to say, but coming from the EU at that time, but even about the further developments in other markets that are not EU regulated. And so this is also where we see that there is a train on its way, and you can't stop this train anymore. And this is finally about sustainability in shipping. And there are many aspects to be discussed. Many of them, or as of course all of us want to make some money in shipping, the issues are always related to the operational side, to the financing side. So more and more we are talking about the need of embedded solutions, and therefore we have the need of data and many other aspects. So when it comes to your original question, I think I'm not worried at all, because the period of a president is about 4 or 5 years. So what? Sorry to say.
So thank you very much for that comment, Olaf. I was reliably told that the next vessel a ship owner buys should be thought about. Instead, he should invest in a hill in Bhutan to probably buy some forest land there so that he can earn some money out of it. Is that something as absurd as it sounds that you ever heard?
I think it's not so absurd as it sounds, because it's pretty simple. There are organizations who are finally investing instead of the ship owner directly already in these markets. And so it's an indirect investment that the ship owner is doing today, but why shouldn't he do it directly?
Well said, well said. So to get you all a little interested, we had this opening comments to let you all know the diverse experience this panel has from a perspective where the world's tonnage focuses, that is Greece, where the German market was, where the ship finance hub was, and probably is still coming back. But to make us dive a little deeper into the subject, I'd like to invite Orestes to come up and give a 10-minute insight so that we get a little gravitas, and then we'll open the stage up to the audience. So Orestes has got a presentation which he's going to run us through. Over to you, sir.
It's better, yep. So, how many of you are ship owners or must comply with the new regulations? Any ship owners? Nope. Okay. So you're gonna pay the bill. Thank you very much. Charterers, I'm not so sure, but for sure, the MEPC 83 rules, yeah, have already sent the bill to you. So it is about carbon markets, it's about shipping, and the idea is how to convert, let's say, to convert the compliance, the necessary compliance to profits. So in reality, you have only two options. The first option is just to blindly follow the technical solutions. Sorry to say, I'm an engineer by myself, but there is no solution, there is no technical solution for the moment that can reach the decarbonization levels that are set by the international community. It's not EU, it is not Donald Trump, it is not China and the Communist Party, it is the IMO, it is the assembly, it is, let's say, the flag state club of all members of this globe. So, do we have the technology? No, we don't. Do we have, let's say, the fuels? Yeah, we can debate about ammonia, we can debate about methanol, blah, blah, blah. Great. But if you opt for ammonia, if you opt for fuel, whatever, do you have, let's say, any supply chain to, let's say, feed your vessels with all of that? No, you don't. Do you have regulations for the storage of ammonia? No, you don't. Do you have trained crew persons? No, you don't. So either you go for the technology and you hope that you have picked up the right card of fuel, the right card of technology. It can be wind assist solutions, it can be bubbles under the hull, it can be whatever, but you don't have it. And that means, at the end of the day, that for every ton of CO2 that you are going to emit, you have to pay also fines in Europe under the EU ETS system. And of course, as per the last week of April, MEPC 83, then there are under $100 in terms of penalty, or 380. And this is, let's say, the bill for today. And the other, of course, option is, allow me to say, is the option for the smart guys. Because the smart guys, they can play the card of carbon. And carbon is there, it is already there for the last 40 years, even more in some cases, especially in the US. So, and through carbon, you can achieve compliance, but you can also gain time for your decision making, to discuss, to decide on the new technology, whatever, and of course to generate savings for your vessels. So this is the timeline. So the train is already gone. Since July 23, we have already the net zero framework. That means, the net zero means that, guys, in 2050, and this is not so far away, in 2050, practically ships should emit no CO2. Of course, ships will emit CO2. They will achieve something like -20, -30 with technical and fuel means. However, the rest of it will be somehow compensated with financial means. And this is, let's say, the carbon allowances or carbon derivatives, or call them whatever you like, carbon markets. April 25, MEPC 83, you have seen the movie, you have seen what happened, you have seen that although there was no unanimity, the rule is already in place and will come in force after 27. Why? Because we need the assembly of 26 in order to make this decision final. October 25, we are going to have the formal adoption of the IMO Net Zero Framework. That means expect more technical issues, expect more technical burdens, and in March 27, the Net Zero Framework enters into force. This is the reality. Of course, it's not about technical stuff, but you can see there are two lines. If your ship is A, then you are below the line. That means you are compliant. In that sense, what you can also achieve is you can transfer your savings from the compliant ship A to the compliant ship C. Because the B that is below the two lines, the B has to pay the bill. And the bill for the moment is around $100 per ton for the moment. And in the C case, you have, or you may use, let's say, the savings of the A, and you have to compensate the difference of the tier 1, let's say the 100, plus the 380. So I'm not going to tire you up with all these regulations, but this is in reality the case. So if you follow, let's say, the rules, and just simple numbers, as you can see, for a dual fuel 14,000 TEU container ship, let's say with annual emissions around 124,000 tons, the compliance by using, let's say, carbon allowances bought today by Carbon X, and if this is just an indicative price of 25, it would be around 248. With this, let's say, cost, you can fully comply. Why 25? Because Carbon X is a big house and they can have, let's say, lower prices. If you go out in the market alone, then the price will be around 65. It can be even higher, 100. This is, let's say, the service that you pay for the big houses, the big boys. So, in another case, of course, you can follow, let's say, for the same scenario, for the same ship, for the same, let's say, cases, you can have, let's say, compliance with something like 325,000. While if you go alone just to pay the penalties, it will be around 4.9 millions. This is not much. Let's say you can just play with the figures. Just estimate, let's say, the number of tons times the value. It is simple multiplication of the second grade. It's not so difficult. And of course, you can have other compliance mechanisms like, I don't know, using methanol, using fuel XYZ, I don't know, naphthalene, whatever. And you can, of course, avoid some of the burden. And of course, you might reduce your carbon cost. However, what you're not going to reduce is the total cost, because all these super sexy new fuels, they will come up with a price that is almost 7 times more expensive than oil today per unit of energy. Of course, we can play with the tons, grammars, blah, 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 but per unit of tons, unit of energy, this is it. So, in few words, of course, what we expect is an extreme broad impact across all shipping segments. We do not expect, let's say, things to be the same, but we try to, let's say, keep all the stakeholders active in this game. So, the technical solutions that you may have, emerging onboard energy or carbon savings or reduction technologies, wind assist solutions, bubbles, you name it. Operating routines like weather routing, financial decisions, retrofit versus new investments or whatever. All of this means risk. And risk means less available capital. And risk means also higher cost of transport and operations. And all of this means that unless you play the smart card of carbon, you're going to face and challenge all these risks. So, technology comes with an extra cost, absolutely. Charterers are not willing to pay for this extra cost. To the best of my knowledge, there is no something like a green charge, there is nothing like a green, I don't know, benefit for the owners. The higher cost of the assets means less available capital. Non-uniform technology means less operational flexibility. You know better how to run your ships. You don't expect IMO or me or anyone to tell you how to run your ships. And of course, more sophisticated tonnage, let's say more sexy in technology, means less liquidity in the aftermarket. How can you sell your ship in the aftermarket when your ship is super duper specialized with technologies? So, in few words, the carbon markets is the tested option. It is included already in the IMO documents. It is called as remedy units. Operators may opt for the oil, because you know of your risk return, because you can keep on using oil, because you avoid extra risk, because you follow the technology once the technology matures, and of course because the carbon is the only option that allows you to keep on using oil. And oil is what you know. Oil is what you buy today. So, Charterers will opt for vessels that do not impose any fuel or operational risks or inflexibilities. You know, charterers are there for the consumption and speed. They are there to negotiate all of this. They're not going to negotiate if and what if and I don't care. So the compliance is, let's say, important, but compliance in this way here, it has to be smart, because you need to convert the burden to opportunity by buying the allowances, by having a strategy that says, I'm going to buy the right quantity at the right price at the right time in order to comply. Not, let's say, in the last moment, as most operators will do at least this year. And of course, you know, investors are not going to risk their money in new technologies that are untested unless they would like to. And carbon is a tradable commodity. So if you bunker carbon at a low price, then you can sell it at a higher price. So it is up to you to decide if you're going to be a passive consumer, somebody who is going to pay the tax, the levy, I don't care how you define that, or you can make money by actively getting engaged and involved in the new carbon markets. So that is, let's say, in a nutshell. Happy to discuss, and thank you for your attention.
No, thank you very much. That was absolutely enlightening. And I think there are enough take-homes about what you presented. In my view, I picked on a wonderful question which came about. You emphasize that the charterers are not going to pay for this. There are enough owners who are starting to put clauses in the charter parties, etc. But what I want to, before we go into the next presentation, let me ask a question to Olaf and to Nijo on what you just said. Nijo, to you specifically, legally speaking, who do you think is responsible for penalties? Because if a vessel is coming in and is in breach of the carbon regulations, they go and say, this is the vessel, it is the ship owner's problem, but we are an institute of chartered shipbrokers. We would like to hear something, how you think from a legal perspective, in short, who's responsible, ship owner, charterer, if there are penalties imposed? Your call.
So thanks, Captain. I think the regulations itself will determine who is the first port of call for compliance. Even though the MPEC 83 isn't full-fledged regulations, there are still gaps to be filled in. If you do take the Fuel EU regulations, which is in force, they put the responsibility solely on the entity that undertakes the document of compliance, the ISM management. Now, when the EU legislator drafted it, they had a tendency to equate the ship owner and the ISM holder to be the same entity. So they said, okay, a ship owner manages his own vessel. Technically, he is the master of the fate of the vessel when it comes to ordering of the fuel. He decides the cargo to be carried. He decides the route of the vessel. He decides the speed of the vessel. So he decides what fuel needs to be bought. And so he is the one that is responsible. But that is not the case, as we know. You have got third-party technical managers. The DOC holders are third-party holders. And if they are the ones who are put in charge of compliance, then it is quite unfair, isn't it, that they need to be the ones who have to pay the penalties. Because as Orestes was saying, you see the two lines that he has drawn on that was in his presentation. If you're well below the threshold, MPEC also talks about the fact that there could be benefits that come to those people who are well below the threshold of GHG emission targets that is placed by the UN. So are you going to give that benefit as a ship owner to your manager, who's a third-party service provider, or do you want to use it yourself? And if you're going to buy into remedial units, you're buying the remedial units for the fuel that was used on the vessel. So is the technical manager going to keep the surplus remedial units that he has bought, and he will exchange it within his pool, or is he going to give it to the ship owner? Now, all of that then comes on the side. The side person is the charterers. So the charterers are sitting pretty because they're saying, okay, let them fight it out, because this is legislation. I don't care. I don't care. It's legislation. But unfortunately, BIMCO also played a role on you guys where they bought up, again, under the fuel EU provisions, they've also put in it's a very fair clause, but it takes on the responsibilities between owners and charterers. So you can contractually move at least the economic liability of complying with these sort of remedial activities, whether in terms of paying penalties or not. However, I think the buck stops ultimately with whoever has been registered with the approved authority as the compliance entity. So it could be that the owner says it is the manager says it's the charter says it's somebody else. But ultimately, whoever is registered as the person who's supposed to comply with, they will have to pay. And if whoever is contracting with that party has not taken indemnities, advance payments, or guarantees already in their pocket, it's going to be a long, drawn-out dispute. So get your contracts in properly and make sure that you weigh in who is in charge of those penalties. That's all we can say for now.
Thank you very much, Nijo. I can see yourself running to the bank with a lot of disputes, if not contractual terms that you draw out. But nice to see a smile on your face, but you got the underlying message. The lawyers will definitely make money out of this. This is my stand on it.
No,
but
it's only if there are disputes. So unfortunately, there are evil people like the ICS who help ship owners and ship brokers, and they draft really good clauses, and they take away my bread and butter. So I don't really like you guys.
That's all right. You're on our panel, on our invitation. So we are being polite and letting you sit here while you say that. But Olaf, before we let Nick go away with his presentation, we don't want to have you just grin at what Nijo said. But moving the topic a little bit, where do you see, or will the specific number of emission rights always be limited or even reduce over the years? Because it's much like the way bitcoins are going. Less is more. You're creating demand. What is your perspective on it? If you answer this well, Nick will probably have a nice little landing platform to talk about his Carbon X.
Thank you, Captain, for this question, and I will try to use it in the best way as an introduction. So just allow me one comment to Nijo back and what he just explained. I think in general, there's the phrase, the polluter pays. And this is finally, then you can raise the question, who is the polluter? Is it an SPV? Is it a person? No, usually it will be something like an SPV behind. And then it's a question of the contractual background, how do you get rid of these obligations, or you can share it, or however. Yeah. But back to your question, Captain. The system with the carbon rights is, in general, it is constructed in a way that every year the rights will be reduced step by step. So just assume that you take this year, we have 100% of rights, and next year it will be reduced by 5%. And this will be the way ahead. This is clearly agreed between the organizations that are responsible for this. And based on this, of course, we already know the world is in need of energy, and this energy will be mainly still based on carbon emissions. And so the reason, or the outcome of this is we will expect continuously increasing prices for carbon rights, emission rights. And I think as all this is limited, it's not only limited, it's even reduced. This is even harder. It can be combined a little bit with the, let's say, with these Bitcoin ideas that we have seen in the past, because we have seen that there is a limited number of Bitcoin possible, available from the technical side, and even if some are lost somewhere, still this limitation is existing, and so it is used as, let's say, an investment possibility also, and this is expected to be the same with the carbon rights. And I think this is something where Nick can contribute much more.
That's fantastic. So I'm more convinced than I was before we started this panel discussion in investing in forest land in Bhutan. But without physically investing in it, how do you trade carbon is something probably Nick will explain to us better. So over to you, Nick. Let us have another deep dive, and then we'll open up the questions to the floor. So if you are having any questions coming to mind, hold on till you listen to our second presentation by Nick. So Nick, over to you. Let us know about what you have to say, sir.
Thank you so much. So, hello again. Can I start with a question to the audience? How many of you guys do you have interest in Europe? How many of you have vessels that go to Europe or deal with clients that go to Europe? Okay, nice. So why do I start with Europe before I talk for the rest of the carbon markets, right? Because basically Europe is currently the blueprint for carbon markets, and especially for compliance carbon markets, right? Thank you, Nijo. Consequently, I would like to show you real quickly how things work in the European emissions trading scheme, the so-called ETS, and then I will elaborate in general about the carbon markets, so you can understand better. The important thing about the ETS is that, of course, and also the very important part for a carbon trader in order to offer the best of services for a maritime client is to have the data. And your data are connected with the MRV. The Europeans have put a deadline for the 30th of April every year, so you can submit your MRV data regulations, and based on those data and based on your MRV numbers, you will know exactly how many carbon credits you will need in order to comply in Europe. The compliance deadline for Europe is the 30th of September of every year. The important thing, which is probably the most important and the most dangerous detail for a maritime company, are the penalties for non-compliance. So the penalty is 100 euros per ton of CO2 that you haven't bought a carbon allowance. And on top of that, you also need to pay the price of the carbon allowance on the day that the penalty is being imposed. I will get more to the carbon pricing in Europe in the next slides. So, but what you need to know right now is that currently the carbon price in Europe is around 68 euros, and due to the system that is constructed, which is a cap and trade system, which means that every year you have less allowances for the same volumes of CO2 that the vessels emit. Consequently, the price in the long term is going up. So you need to calculate 100 euros plus whatever above 70 or 80 euros that is going to be in September. The enforcement of the ETS rules, of course, are taken care by each of the EU member states, and the supervisory body is, of course, the European Commission. What is important for you to know if you go to Europe? Every vessel that is bigger than 5,000 gross tonnage needs to comply with the carbon rules. The good thing for the maritime sector is that the EU, the only thing that they have been slightly soft, and they're infamous for not being soft with anything really, but they were a little bit more realistic in realizing that the maritime sector is a more complicated sector. They did a gradual application of the system, which means that for 2025, you will only have to deal with 40% of you only need to comply for 40% of your emissions. This is going to jump up to 100% in 2026. So, you know, the time is near. So hedging and having the right strategy while the prices are still low is the way to go. Another important thing is that if you think that by starting from a non-European port and ending up in Europe you will walk away from From the regulation, that's really not the case, because even if you start from a non-EU port and you end up in an EU port, you will still have to pay allowances for 50% of the total CO2 of that voyage. And of course, if you move between European ports, you need to pay 100%. The market structure of the system, it's quite predominant, because I think it's quite a question that I get a lot. Where do I get these allowances? How does that work? Imagine something like a bank account, really. It's called Maritime Operating Holding Account, the MOHA, which you or your clients should open in the EU member state that they have the biggest amount of port calls, or if in case you are new to Europe and you've never done business before, you need to open the account on the EU member state where you had your first port call. And then, of course, you have the other type of account, which is the trading account, which is more for people like myself. It's not really for people like you. The good thing is that in both cases, you can sell your allowances. I'll give you an example. Assuming that you were clever enough, you hedged on time, you bought, let's say that you needed 10,000 EU allowances for this year, but you were clever enough and you bought 20,000 allowances for a price of 68 euros. Next year, they're going to cost around 100. Nobody stops you to sell your 10,000 allowances that you didn't use this year. You can sell them next year for a higher price and make net revenue. And you can do that. Nobody stops you in doing that. And you can do that from both accounts, obviously. You don't really need a trading account, which is a little bit more complicated in opening in order to sell your allowances. Yeah, like obviously I'm not going to bother you much with the regulatory part. Whoever needs more information, I can share the presentation later on. There is a way of us helping you doing that. We're very specialized, and our consultancy service is taking care of everything on that regard, so you don't need to worry. How does the trading process work on the carbon trading markets? Quite simple. You request a quote. How many allowances do you need? We confirm the price, execute the trade, and then your allowances are transferred in your special account. That account looks really like a bank account. So once you open it, you see how many allowances you have inside there. The important part that you need to know about the price of carbon in Europe is that it's a highly volatile market because it's connected with the energy markets. Consequently, and of course, the fact that the system is a cap and trade system, what does it mean, cap and trade? It means that every year, the cap of allowances, the carbon cap is going down, which means that there are less allowances in the market, and that drives their price up. Also, the fact that the allowance price is tied to the energy markets, and I'm talking about petroleum, TTF, which is the natural gas, that in any sort of geopolitical issue or any factors that affect the prices of those commodities, they automatically affect the price of carbon in Europe. So if you're really good on checking the prices of petroleum, the prices of gas, and you know these markets quite well, it's a pretty similar story with carbon. You can hedge pretty well if you know how to play with these markets. Yeah, obviously, especially with natural gas, and I want you to keep that, we have the highest correlation with the EU allowances prices. So as long as you follow the TTF price, it is pretty much a similar story in carbon. Whatever happens in TTF happens in carbon as well. Yeah, obviously some questions that a lot of people are asking, and you can take a picture of the answers, of course. Now I'm going to jump a little bit more into the global carbon markets and how that will affect you real soon. Two important facts. The European ETS is nothing new, guys. We're not inventing the wheel here. This has been happening since 2004. Maritime joined this year, but it's a pretty similar story with other very important players that you guys are dealing with. And I'm talking about South Korea, I'm talking about China, Japan, Australia. They all have installed their own carbon compliance schemes, and they are going to include the maritime sector in the near years, in the following years. The easiest and the most important thing about the other markets compared to Europe is that they accept international carbon credits. International carbon credits compared to EU allowances are way cheaper, much more impactful to the environment, because as I told you, they derived from actual carbon removal projects. There are many types, many different technologies, and all that can be used to your benefit based on your appetite. And the rules are still the same. You can purchase them, you can hedge them, and of course, you can sell them afterwards. Another very important thing that we offer at Carbonex, which is quite interesting compared to the rest of the competition and the options that you have, is that we're offering long-term investment into a carbon project that you can get the credits and take care of your needs for years to come. Consequently, we can draft a plan together where you purchase an initial amount or invest an initial amount of money into this, and then we can draft a plan where you can do revenue generation in the near years just by doing the right amount of hedging and the right amount of sale on the right time, on the right moment. Yeah, and these are my main comments. I would be more than happy to listen to your questions later on.
Thank you very much, Nick.
Thank
That
you,
was very
Captain.
insightful. What comes to mind straight away is what I've been going through for the last 4 years, a little more than 4 years. When my son was going through college, I had started saving for that 10 years before he went to college. And I think what you are emphasizing is much like that if you're going to be having a vision of expansion of your maritime asset going in and out of areas or regions which are heavily compliant, start saving now. Is that, in layman's term, what I've understood?
Totally, totally. Look, what is very important for the shipping sector to understand is that carbon markets are not going anywhere, are not going away. Trump or no Trump, it is going to be the case. And it is to your benefit that carbon markets are so related with energy markets. And energy markets is something that you know way better compared to this. So what I'm trying to tell you is that the fastest you hedge and the fastest you start investing into the carbon, the fastest you will see benefits and you will see actual net revenue coming out of this. And the thing is, just to provide an extra detail, as you see, all the major global players will introduce their systems in the years to come. Most of them are already doing it right now. Even the IMO, this is my take on the story. At the end of the day, the IMO should and probably will just align a global carbon pricing based on all the systems around the world. Consequently, once you start, investing on the right credits, getting them on time, and then doing constant resales afterwards, you get money out of nowhere for just being sustainable. As simple as that.
No, that I completely understand. I think we're homing into what we opened up by saying, how are we going to make money out of this? And what you're trying to say is, save now, hedge now, you will make money, but you'll have to spend money now for an anticipated saving in the future. But I know Orestes has been quiet for a while, but I have to bring the conversation from Europe into the local marketplace. And the first question that might come onto the minds of a local ship owner who probably is trading within PG and the Indian subcontinent, or is wanting to go to the Far East and saying, you know what, I'm not going to cross the Suez with my ships. How about that? And how is all this conversation going to affect me? So Orestes, if a ship owner says, you know what, I'm not going to go to Europe with my ships, how do you say they have to stand up and listen to this conversation even if they don't plan to go to those areas? What are your take?
Easy. So let's be pragmatic, okay? Assume that you have 10 millions and you would like to buy a ship, okay? So you go out in the market, S&P, usual stuff, within 15 days, half a month, escrow accounts, blah, 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 the ship is yours, as is where is. Great. What about, let's say, your compliance cost with the carbon that comes with the IMO? So if you just charter out the vessel to a charterer, and just for using your ship, the charterer, who is paying for the fuel and the usual stuff, okay? You have to pay the carbon bill. And the carbon bill is around 1 million, even more. That means that you need to have a strategy for your ship. Assume that you are playing ball for the big boys and you would like to go into, let's say, new building programs. And then you're going to face challenges of 20, 30, 40 millions. But then at the same time, you need also to have allocated the carbon allowances, the savings in order to start trading. And this is the beauty of it, because we're not talking about Europe. I'm European, but I don't care about Europe because the real trade is outside of Europe. And of course, the real money is in the subcontinent, in Southeast Asia. This is where the money is. So, but even in this case, how can you lure, how can you attract the charterer? If you say, look, I'm offering you the same, let's say, consumption and speed, plus a better green profile. Why? Because I get this certificate for Carbon X that says that my zero is compliant and net zero because of financial measures. So you have something to add in the discussion. This is how you can make money. You can make money by making your ship more attractive, by, let's say, budgeting your money, your expenses in a better way. And in my view, what is very important, it is that you can start thinking of the future, how to start changing the assets, the portfolio of assets. And this is something that nobody says the financial markets, today in Europe, tomorrow, let's say worldwide, the portfolios of the assets, let's say how many ships you have under your, let's say, bank portfolio, whatever, debt portfolio, they have to follow the trajectory of decarbonization. -5 for the owners, -5% for the portfolio managers. And of course, Nijo, there are many bankers who said, okay, Donald said, drill, baby, drill. I can follow that because it's short-sighted. It's short-sighted because their tenure is short-sighted. They're not going to be there after 5 years.
No, thank you very much. I think we'll open the questions to the floor. I have another question that is in my mind for Nijo, but I'll give the opportunity. This is a very unusual platform because ICS, normally we have a Slido screen and questions go up, but today we'll have a hovering mic going around. Anybody having questions, please keep them short. We have the Slido, isn't it? But we will give them an opportunity. If nobody, there you go. So what is your question? And please direct it to a particular panelist if there is, or if it is general, specify that.
Sure. I have a question for the...
Yeah. Take it closer.
I have a question for the panel. British Petroleum went to beyond petroleum. Has it gone back to petroleum? That's my opening question. And with the highest level ESG who has recently left on the first, or leaving on the 1st of June, I wonder how that affects this moving forward.
Do you have a view on it, Nijo?
So, I'm pretty sure Dr. Orestes has a bigger take on it, but I think I mentioned this in my opening statements that yes, I mean, people have made use of decarbonization, climate change, and as a very woke thing to do, and they've jumped on board and they've jumped off ship as quickly as when Donald Trump says, drill, baby, drill. However, I think from what I hear from Dr. Orestes' presentation and from MPEC 83 of the IMO, this is not something that is geopolitical, but it is worldwide, because this is a global body that has set out a regulation. It has taken on itself the initiative to reduce the GHG intensity of fuels that's being used in ships. And I don't think one particular kind of, because I come from the banking industry, and I know some of the world's largest bankers have jumped ship from the Net Zero Banking Alliance, which was supposed to be the torchbearer of ESG compliance and then green banking and so forth. But I think, and Orestes, you can take it on from here, but I think this time it's different because it is agnostic in terms of region, because it is global. And the one country that is saying drill, baby, drill, does not flag too many vessels. There's not too many US flagged ships that's actually doing too much of trade. There's the Panamanians, the Liberians, the Antiguans and the Barbudans. You've got, those are the ones that have to comply. It's not the Americans. So I think it's slightly different at this stage. Huh? Orestes?
Yeah, I didn't hear very well the second part, but I think the first part about British petroleum and oil, I think it's very simple, because oil is the only competitive solution that we have as an energy option. There is no other solution. There is no other solution to revitalize, let's say, the economy of the West. I mean, we can dream about natural gas, and we can dream about Vladimir and friends. We can dream about, let's say, other sources. We don't have them. I mean, this is the reality. Of course, can we, let's say, develop the technology for hydrogen? Yes, we can. We have proven that in the past. However, till that moment, we cannot afford, as a Western economy, or let's say as a global economy, to, let's say, reduce the average level of living standards worldwide. And this is why major players go back to oil. And they go back to oil because at the same time they can play all these financial instruments, and they can hedge, and they can make money out of the carbon and also out of the energy, the physical trade. That's why they're there. And about all of this ESG, all this ESG is also a UN regulation. You can see that everything comes from the UN top down. So all these SDGs and blah, 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 these are UN. And I think that are some countries, some states, not in Europe, they will pioneer, because all these SDGs, they're going to assist the local economies changing either the economy or the local mix of energy or the local social mix in terms of whatever. And all of these are good excuses. So I expect more ESG financing or sustainable financing in the near future.
Olaf, you've been quiet. Do you have a view on it? Do you think greenwashing is the way forward for money? Is the color of money going forward going to be more green?
So I would like to comment on something Nijo just mentioned. It was about the financing side, and that so many banks stepped away from these zero emission initiatives. But I would like to bring one thought into this discussion, and this is what I experienced last year when I participated the audit of a major European bank. This audit was done by the European Central Bank and was concentrating also on the sustainability of their shipping portfolios. So why am I mentioning this? I'm mentioning this because there is pressure also coming from another angle. There is pressure coming from the financial authority, at least in Europe, into the market, where they are behind the greening, and that the regulations about the investments that are related to greening are accepted and are realized. So this is something, I think, what we see in Europe, and I assume this will also be considered in other regions definitely later. So it's one of these developments, of these catalysts, that is supporting the reduction of carbon emissions.
Yeah, thank you very much. I think that answers your question. Are you happy with?
Yeah, I'm happy for now, yes.
Thank you. Interesting questions popping up. Nick, you've been rested enough,
Yeah.
but do you think it's cheaper to pay penalties than buying carbon?
Yeah, I really want to take over that question. Well, probably the calculation was not done correctly. How can, first of all, you don't have the option to just pay the penalty. you have to pay the penalty and the price of the allowance on top of it. So how can that be cheaper? The allowance right now in Europe costs 68 euros. The penalty is 100 euros. So if you, and assuming that the penalty will still cost 68, the allowance will cost 68 euros in September, you will have to pay 168. So clearly not cheaper, not at all. A very interesting question is also the first one, which is which I take that a lot. If more users are joining the system, why the hell there's going to be less allowances? Well, guess what? That's how the system is structured. It's a European structural thing in order to drive the prices higher and make more money for the European Commission. Is that cool? Not really. Is that fair? Not really either. But you know, that's the whole point of a cap and trade system. It's a structural thing. It is what it is. Personally, I cannot do anything about it. Sorry for that. And the third question is also a very, very interesting one. If you use LNG and alternative fuels, guys, as long as you have CO2 emissions, no matter where they come from, you will have to pay allowances.
Now introduce yourself and ask the question.
Introduce
please.
yourself and speak a bit louder.
Hello. Hello, hi. Can you hear me? Hello.
Yeah.
Hello, my name is Sunil Arora. I'm a managing director of a Bond Marine Consultants UK. You see, LNG will give you for every ton of consumption 2.85 tons of CO2. And your heavy oil will give you 3.15. So there's not much of difference as far as carbon is concerned. LNG is for SOx and NOx, you know. Yeah, that's what. My question was this, this fine is $100, right? $100 at per ton. So it means if you burn 1 ton of extra fuel, you will pay, if you're a heavy fuel oil burner, $315. In this case, you will pay maybe $30 less. Okay, the cost of fuel will not cover it, you know. What happens if you buy carbon credit in advance? Then we don't have to pay fine.
No, you can.
Yeah.
Yeah.
Thank you. That's
If you buy your carbon credits in advance, you will not be fined. No, if that's your.
So companies can buy carbon credit in advance.
Exactly. Exactly. I mean, assume that you have a need of 10,000 tons of fuel per year. So you can estimate your carbon emissions, okay, times 311 for oil, and then you can start preparing a strategy to buy and hold some allowances. So when you're gonna buy the allowance when the market is, let's say, inactive, for example, in some months in the year, then expect lower prices, and then gradually you can start creating a position. So for full coverage at the end of April or in September. But this is exactly the point. The point is by using, let's say, a smart strategy that is based on dynamic pricing. This is what we do at H6. I mean, we have a dynamic strategy. And then you can communicate that with, let's say, a major house, a broker who has, let's say, bunkered an inventory of allowances at the given price and expiration date. Then you can create a strategy that, first of all, budgets the compliance cost, and secondly, gives you the opportunity, if you want, to start trading. Because, of course, there is no need to hedge for 100%. You can go for 120, 140. It's up to you. It's your risk appetite. Some people might say, I hate that. I will go for 30, 40, 50%. Some people might say, I'm going to go for 150, 170. I mean, all of us, we have different risk profiles, different budgets, and different capacities. But yes, there is no issue. You can do all of this. You can get into the game. And, of course, you can also learn out of this game. Because, as said, every year we're going to have less and less and less allowances, so the average price will be higher, but seasonality will definitely change in the market for sure, because more players, more ships, more companies will also increase the number of, let's say, players. It will increase the liquidity in the market. You see the point?
Yeah.
Yes, you can purchase futures as well. In the EU, you said, if
wait for the mic, sir. Yeah, you can ask the question now.
You said if you buy a carbon in advance, yeah, then you need not pay the fine. But if you only buy the future, which is basically you're not really buying, you say I will buy in the future, or in that case, you are also giving consultancy on that part. That instead of locking up so much of money, I do some kind of a, like, option trading or something like that. So
Okay,
that I don't
okay.
lock in so much. Yeah.
Okay, great question. So, what I usually consult to my clients is for the first year, which is now 2025, to purchase spot. So you are, once you buy it, you are covered. Then, as of next year, you can start purchasing futures, and you can cover, or options, or whatever you want. The thing with carbon allowances in Europe is that the market is pretty flexible. Whatever is more fit to your needs, you can go for it. But for 2025, I would highly recommend people to buy spot.
One small thing. But before your vessel goes into the trading, you should have it with you. You can't be having on a future that time, right? Otherwise, you'll end up paying fine. Correct.
Yeah.
Okay.
We've got 5 minutes, and as a good master mariner, I would calculate my ETD well. Otherwise, I'll be charged dummerage. Although I've been given 15 minutes of a lagged start, I'd like to finish on time. So we've got 5 minutes, and we'd like to start with Nijo. Give us and our audience who've been patient here, haven't left, I haven't seen anyone doze off or go on mobile. So thank you very much for being attentive. Your closing comments, give them something to go away with. From a local perspective, I saw a message pop up, Fujairah being a bunkering hub, and where is that, if you want to take that as your closing remark and how that affects. So each one, closing remarks, and then we'll get off the stage. Over to you, sir.
Thanks, Captain. So I think I'll close with this in the sense that HHX and CarbonX, you've put all your X in one basket, by the way, today. It's well done, well done. So HHX and CarbonX are talking about carbon credit and its remedial units and so on and so forth. There's a little point that Dr. Orestes mentioned was that, see, this is the easiest way in which ship owners, operators, charterers, managers can meet compliance without actually having to change the nature of their business, change the nature of their technology, change the nature of their fuels. Because this is what the GHG emission scheme of the IMO and the Fuel EU and ETS scheme is trying to bring about. It is not trying to make you rich, generally speaking. It is trying to bring about a change in the utilization of your fuel so that the greenhouse gas intensity of your fuel is reduced. It's brought down to a certain level that the environment can sustain. So, if you do not believe in anything that Nick, Orestes, or Olaf had to say about the carbon credits scheme, so that you shore up for the future and you take the step as and when pollution happens, change your engines, change your fuel systems, change your propulsion systems, change your routes, change your speeds, change your cargoes, and then you'll be fine. Not one single carbon credit needs to be bought. Not one single dollar has to be done. But there is, to talk about bunkers, you don't have enough bunker infrastructure to get the renewable fuels or the renewable fuels of non-biological origin and so on and so forth. You do not have that infrastructure ready. But you still have the compliance that is coming at you. So what I think innovative solutions such as what has been put on the board today helps ship owners and operators meet those compliance targets in the short to medium term while giving you the opportunity to plan ahead for the future on more robust measures that is actually tangible when it comes to fuel usage and the technology. So this is my point.
Thank you. That was brilliant. I'll jump right across to Olaf. He's been breathing heavily for a while. Olaf, what are your closing remarks from a perspective of where the money comes from and somebody who understands legal aspects? Your closing remarks for our audience on the subject, sir.
My closing remarks are going into the direction, start to not to see carbon as a burden, start to see carbon as an opportunity, and try to understand it as a financial tool. So you can make money out of it. It's really the phrases we use, like hedging, and the caps, for example. All this is coming from the financial markets, so start to think carbon, to interpret it with opportunities and investment opportunities. Thank you.
Now that's interesting because you're nicely closing the loop of how we started and how we promised them how money can be made. We've talked about futures, we talked about hedging, we talked about buy your carbon in advance. We don't have fuel, so you got to start thinking of keeping carbon reserves ahead of time, so you have the liberty of trading your vessels wherever it is. But coming to Orestes, for your closing remarks, from a perspective of somebody who would probably having a gun pointed at while sitting in the IMO, in those lovely committees who sign off regulations, do you have a defense for this? Were you one of them who signed off this regulation, by the way, while you were there? Closing remarks, sir.
Yeah. So allow me to spare the details about IMO and how the decision-making mechanisms at the IMO, but allow me to focus on one point. IMO and all the states, they have found a very good excuse, accurate excuse. I mean, the grounds are there of climate change and all the risks of climate change. But they have right now an excuse to levy, to get more taxes, to get more fees, and to finance the liquidity of their states. So all of it, as you can see, I mean, either it's EU ETS, IMO allowances, or allowances Brazil, South Korea, or whatever. It is about the fiscal, it is, let's say, about the economics of the state. They would like to get this money and do something with this money. But this is your money. And this is, let's say, the issue. The issue is that so far, environmental regulation was about technology, compliance. You were paying money to the technology providers, and the technology providers were paying back taxes to the big boys, to the big states. This way, right now, they go directly to you, and they say, I don't care about the technology. You should buy the technology of the people who feed my system, but at the same time, I would like to collect your money directly. And this is, I think, the key message here. This is something that you cannot escape. It is global. It is part of the global system. We can argue about if it is fair, if it is, let's say, just, whatever. We can debate on all of that. But in reality, it is your opportunity to convert the compliance into, let's say, potential profits by also retaining your operational profile the way it is and in the flexible way you want. This is, let's say, your business. No one can, let's say, no one knows your business better than you do. So is there any benefit from the dispatch? Because we are not on the Mirage. So, I mean, okay, we're still in the late time.
We are all right. You can, yeah, no, well said. We've saved the best for the last, sorry, the youngest for the last. You're the odd one with the light colored jacket, so you get the privilege of nailing the coffin and letting them go away with an interesting perspective on buying carbon now for the future.
Look, I want to finish, I want to have I end up my closing remarks on a very positive side and conclude what we said. So, basically, how I want the audience to think of the carbon markets is that it's a very new thing for you, and I understand if you are confused or you don't really know how that will work for you. The point is that right now, it's the easiest and most practical thing to continue operations as you know all these years. Solutions exist, flexibility exists, and as long as you are smart enough to start ASAP, you can make money out of it. It's as simple as that. There is not enough ammonia in the world to make you green. The systems, as you saw, as we demonstrated you, they will get you. Might that be in Europe, in China, in India, in Australia, whatever. It's the case. However, solutions are here, options exist, and everything can be very easily done once you do it correctly. smartly, with the right partners, and start soon, profits are on your way.
Thank you very much. Round of applause. The Institute of Chartered Shipbrokers got you a brilliant panel together. Thank you for your insights. Thank you for listening. I think as the institute where chartered shipbrokers and charterers are very important to us, we have given you an insight into how you may be able to make money, turning carbon challenges into strategic advantages. So if you want to know more, these lovely gentlemen are going to be around hovering here, so please reach out. Thank you very much. A round of applause for our lovely panel. Thank you for listening, guys.